So I'm going to the 4 hours time frame now, to the lower time frame. And first off, I would like you guys to copy this Fibonacci settings. If you want to get your Fibonacci, come to this task bar here, and then this is the Fib retracement. As you can see it, when you double tap, you see the retracement, and you also see the extension. So we are going to be using the retracement, because Fib retracement is when actually let's say more buyers come into the market and pushes the market high. Retracement is they also call it pullback, which is going to cause what they call, because at this point in time the market is in an uptrend, so it's going to cause what we call a lower high in order to create a newer high. So the retracement is the end of the retracement, is the end of this pullback we are talking about. So when it gets to that point, we're expecting that buyers will push in more money into the market to push the market more higher. So that is just what this Fib. So it is a calculated movement. So it calculates how marketers, how investors are going to push money into the market. It's actually a technical SMC. It's still going to be part of smart money concept, because this happens when investors mostly push in money. This is not for the retail traders or day traders. So let's just go ahead. I want you guys to first of all copy these settings you're going to be seeing. So copy these settings here. So you're going to copy this. You can pause the video at this point in time and copy these settings. Make your Fib have all these kinds of settings too. So that's just it. Then you can give yours any color you want. I'm using a white background, so my colors are going to be something I'm going to see well. So let's say this is how to use the Fib actually. Let's say you see the market make a series of sell, a very good movement, a very good sell movement, and then you want to see where the sellers will continue selling from. So one thing you're always going to look out for in Fibonacci is the huge movement. They call it I think they call it the manipulative movement, or Candlestick Bible calls it impulsive movement. So this is the main movement. These 2 candles you're seeing here is the main movement. You can see that there is no bullish candle at this point, so it shows that at this point, I'm talking of these 2 candles here, at this point the buyers were not in the market, so sellers did something in the market. So all you're going to do is, when buyers start coming in, since you know that, make sure that when you're using Fibonacci, it must be a trending market. As you can see, the market is going down, it's a downtrend at this point. So when you're using the Fibonacci, when a huge movement is made downwards in a downtrend, you should draw your Fib. Now when you start seeing the bullish movement, that is the buyers coming back into the market, you should what you should just do at this point in time is bring in your Fibonacci, because what you are going to be looking at is the retracement. Now this is a retracement. Now you can see that this is a low, a lower high, and another lower low. So that is for a downtrending market. So let's draw the Fib here and see what the Fib is going to tell us. So we are going to start from the beginning of the impulsive movement and draw it to the ending of the impulsive movement, and see that it ends here. Then you can give it a nice length. It ends here. You can see where I drew it from here to here. Now you can see that there are 2 points that you're expecting the Fib to reject from, the retracement to reject from. Number one is this 0.6 and 0.79. These are the 2 zones you're expecting the market to reject from, and you can see what happened here. It fell all the way from here. Now this is the impulsive movement. This is the end of the impulsion, the manipulative movement, the ones that the investors did, this huge movement. And you can see that this is the retracement. and you can see that it ended at this 0.618. Now this is what the computer has calculated, so it's human behavior in computer format. So at this point you can see that we wait for the next move. Now last week I also used Fib for a huge sell at this point. Now let's do the same thing here, and I'll tell you guys the rule for it. It's not that hard. So you can see that this is the point that the impulsive movement started, and then it's ended here. This is where it's ended. Let's give it a gap. So at this point you can see that the sellers entered into the market. They pulled the market down to this point. Let me draw that well. They put the market down to this point, and now you can see that at this point what happened, buyers started entering into the market. Let's go to 1 hour and look at this. So you can see that here buyers started entering the market. Now this is the starting of the impulsive movement down to this point, and buyers started entering into the market. So at this point is where you should end the Fib movement. So you draw it from here down to this place, then expect it to reject at the 0.6 line or the 0.7 line. Now you can see that it rejected where at the 0.6. This is the rejection point. So this is the Fibonacci retracement, and this is the extension. So that is just how it is. Then the rule I like to tell you guys I always use is I don't only use the Fibonacci retracement and extension. I also check if this point of the end of this retracement is going to, I also check for other confluences. Is it a strong resistance or is it something else? I also give myself other confluences for it. E.g., if you put your a line here, you see that this place is also acting as a resistance. So you don't just use only because of the Fibonacci retracement showed you that that's the point that the market is going to make another large move. So if you put your line there, you will see that at this point you can see that the market rejected. So it's also telling you that at this point market has also done series of rejections. So possibly at this same point something is going to happen. So this is two confluences now. The RSI telling you, your resistance line telling you that this place is a resistance, and also the Fibonacci confirming that this place is the end of, this is where the investors are going to put in more money to push the market lower. So that is just how the Fib works. Let's look for another place where we can see the work of this Fib. Now let's start this for an uptrend at this point, and let me end this up. Remember the settings. You draw it from the beginning of the impulsive movement to where the ending of the impulsive movement here. So I'm going to draw it from here to here. So if you check, this is where sellers enter the market. After this buy from here to here, sellers started pulling the market down. Now where they pull it down to the 0.6, and then the new buy. You see that is a very good concept in forex trading. This is where the buy movement started, pulled it up. This is where the buy movement ended, and then a pullback, and you can say that this is a trend. So it's an uptrend. You must make sure that the market is in a trend before you start drawing your Fibonacci's. You have to identify the trend, then you start drawing your Fibonacci's, and then the end of these retracement levels, which is this 0.618, should be places where you should check whether there are other reasons to take your trade from there. Now if you draw your line, I believe for the sake of this video, if you draw your line, you see that this is also a support. If you draw it and check what happened in history of the chart, this is